In a market obsessed with hype, three emerging stocks are quietly rewriting the growth game plan. But first, here's what Tom Lee has to say about where this market could be headed.
When April happened and we had Tariff Armageddon and the market went into a free fall, investors liquidated because they thought we were entering a recession. But, and as you guys had covered, like the market then staged a V-shaped recovery, which caught many people off guard because they wanted to have a chance to get in. They wanted the stock market to be like a K-shaped or flat line. Instead, it was a V-shaped bounce. And so most investors are underexposed at the moment, and they're trying to look at headlines with a half-empty view. But as you guys know, earnings have actually been really resilient, and I think it tells a very good story.
Yeah.
If Tom Lee is right about the V-shaped rally, then the technology sector is clearly at the forefront, and these three stocks may be riding that wave before the market fully catches on. One is already leading in chips, another is unlocking quantum potential, and a third is fueling AI behind the scenes. Let's see where the smart money is flowing, before the headlines catch up. But first, to celebrate reaching 1,000 subscribers, we're offering a free guide that explains how top investors identify breakout stocks. Check the link in the description. If you find value in this video, please like, share, and subscribe so you don't miss out. And remember, this isn't financial advice. It is for educational and informational purposes only. Always conduct thorough research. Investing carries risks and involves some level of speculation. Thank you. All right, starting with first pick, Micron Technology Inc., ticker MU. Micron isn't just a memory chip maker. It's a front-row seat to the AI revolution. The company serves a wide range of sectors, including hyperscale data centers, advanced driver assistance systems, industrial IoT, PCs, and next-generation smartphones. It markets through every channel imaginable: direct, online, distribution, and retail, ensuring broad global exposure. But as we navigate Q3 2025, it might be time to pause and evaluate. Is this still a buy after a 35.9% year-to-date rally? To start, let's focus on performance. Over the past month, MU stock declined by 7.3%, underperforming both the S&P 500's 5.9% gain and its industry's 6.6% increase. However, this dip follows a 61% surge over the last 90 days, outpacing AMD, Nvidia, and Broadcom combined. What is driving this momentum? Analysts highlight Micron's dependence on high-bandwidth memory, HBM, a crucial component in AI infrastructure. Its partnership with Nvidia as a primary HBM supplier for Blackwell GPUs confirms this. Meanwhile, the company is investing in a new HBM packaging plant in Singapore, demonstrating that it's not only keeping up, but also expanding capacity ahead of growing demand. Layer in Micron's first space-qualified SLC NAND chip, designed for autonomous AI processing in orbit, and you begin to see a broader story. Micron isn't just reacting to the future, it's shaping it. Financially, the momentum is strong. EPS estimates for this quarter have increased 24.1% in just 30 days. Full-year EPS is expected to grow by 497.7%, with revenue rising over 46%. Even next year's outlook shows a 32.9% increase in revenue. In short, this isn't just multiple expansion. These are fundamentals gaining strength. Now, let's discuss valuation. Despite these gains, Micron has a Zacks rank number 2 buy and a value score of C, indicating it's trading roughly in line with its peers. That's reasonable, given its still developing margins and exposure to NAND price challenges. However, with the company's aggressive push into AI, space technology, and edge computing, that valuation could soon seem outdated. Technically, the chart tells a strong story. Following a breakout rally that peaked at over $125 in early July, the stock has since declined to $109.08. The decline seems orderly, not driven by panic. Volume is low, indicating consolidation rather than capitulation. Many view this as a buy-the-dip opportunity, particularly given MU's year-to-date strength and market leadership. So where does that leave investors? Micron remains one of the clearest long-term beneficiaries of the AI explosion. With a diversified revenue base, a robust innovation pipeline, and a growing footprint in high-margin verticals, MU isn't just cycling, it's anchoring a movement. The price action may have cooled, but the story is still heating up. So, what is your take on this AI tech stock? A good investment with potential, or should it be ignored? Moving to a growth stock that has featured time and again in our picks, even when it was trading for less than half of today's price, we spotlight Celestica Inc. ticker CLS. Now, perched around $156, this electronics manufacturing powerhouse has quietly transformed from an underdog to a breakout star in the tech supply chain. To understand why CLS deserves your attention, let's rewind. Starting strong in early 2025, the stock surged on the back of explosive earnings and growing investor interest in high-complexity manufacturing and AI hardware. It wasn't just another January pop. This was momentum with substance. As February arrived, CLS reached a sharp intraday peak before facing selling pressure, a typical case of profit-taking. However, instead of collapsing, the stock entered a healthy consolidation phase from March to April, digesting gains while institutional investors accumulated. By May, that consolidation paid off. Celestica broke out again, this time with stronger conviction, higher volume, and a more sustained trajectory. The rally didn't stop there. June brought more momentum as CLS recaptured its February highs and continued climbing. Institutional support remained steady. Every dip was bought up. Every resistance level became a new support level. This bullish trend resulted in a new year-to-date high of $156.91, a 67% gain for the year. But here's where it gets even more compelling. Looking ahead, the company is expected to report Q2 2025 earnings on July 28th, with consensus estimates forecasting $1.24 per share, a 36.3% year-over-year increase. Revenue is projected to reach $2.65 billion, an 11% rise from last year. And if that earnings report beats expectations, don't be surprised to see CLS climb even higher. Even more importantly, Celestica remains fundamentally strong. It has a ZAX rank number 2 by a growth-style score of A and a VGM score of A, all bullish indicators for growth-focused investors. Recent revisions have been positive, with one analyst upgrading their forecast, and the consensus EPS estimate has risen to $5.07 for fiscal year 2025. Add in a 7.4% average earnings surprise, and you're looking at a company consistently exceeding expectations. Transitioning to financial strength, CLS also shows strong cash flow metrics, with expected 2025 cash flow growth of 34.1%, along with a 3 to 5 year track record of 22.4% compound annual growth. That provides the fuel to reinvest, expand operations, and strengthen its competitive edge in an increasingly crowded landscape. Beyond the numbers, Celestica's service scope is extensive, offering everything from component sourcing and product design to IT asset disposition and aftermarket repair. Whether it's low-volume, high-complexity builds or high-volume commodity projects, CLS delivers. Looking at the bigger picture, the story is simple. CLS is benefiting from the growing demand for AI and cloud infrastructure components, positioning itself as a key supplier for top-tier tech companies. And while it may not attract the same level of media attention as NVIDIA or AMD, savvy investors see potential in it. In conclusion, Celestica isn't just a speculative high flyer, it's a proven executor, scaling consistently while remaining fundamentally sound. For growth investors, CLS is more than a watchlist name. It's a conviction play in a world of uncertainty. Moving on to the following stock, D-Wave Quantum Inc. ticker, QBTS. We enter the realm of next-generation computing, where science fiction meets finance. While NVIDIA has dominated the AI narrative, D-Wave is quietly shaping the future of quantum. At its core, quantum computing could become the next major secular trend in the tech industry. Unlike traditional systems that process ones and zeros separately, quantum computers utilize qubits, allowing them to handle both states simultaneously. This quantum leap in processing ability opens the door to solving problems once thought impossible to compute. But here's where it gets complicated. Quantum computers are still significant, costly, and consume a lot of power. They often have high error rates and so far remain tools for niche applications, mainly used by government or advanced research institutions. However, things are changing, and quickly. As quantum processing units, QPUs, become more efficient, smaller, and more adept at error detection, real-world applications are rapidly emerging. In fact, according to Fortune Business Insights, the quantum computing market is projected to grow at an impressive CAGR of 34.8% from 2024 to 2032. That means we're still in the early stages. Enter D-Wave, one of the few pure-play quantum computing stocks available. Specializing in quantum annealing tools, D-Wave isn't just theorizing breakthroughs, it's already helping companies optimize workflows, supply chains, and logistics networks. Acting like a quantum-powered efficiency expert, D-Wave identifies the most energy-efficient processes, which could disrupt traditional analytics and digital operations firms. Transitioning from potential to performance, D-Wave has been integrating its Leap platform into major cloud infrastructures. With over 100 enterprise customers, it's already in motion, not just in concept. From 2024 to 2027, analysts expect D-Wave to grow revenue at an eye-popping CAGR of 103%. While it trades at 72 times projected 2027 sales, this company is priced for exponential scalability. Looking at the chart, QBTS has experienced an enormous year. After moving sideways in January and February, a sharp jump in early March grabbed the market's attention. Although the stock faced resistance and declined through April, it stabilized by mid-May. Then came June, the breakout month. Boosted by bullish sentiment and institutional interest, the stock reached a 2025 high of $20.78 before easing slightly to its current level of $17.52, representing a 109% year-to-date gain. And here's the kicker. Between June 11 and June 27th, D-Wave raised $400 million through an at-the-market equity offering, priced at an average of $15.18, which is a 149% premium compared to its previous ATM round in January. This swift capital infusion now boosts its cash reserves to approximately $815 million, providing it with ample firepower for strategic acquisitions and operational expansion. Moreover, Q1 2025 revenue surged by 509% year-over-year, driven by a major system sale to Germany's Jülich supercomputing center, a strong sign that demand for quantum tech is emerging across borders. Looking at the bigger picture, if you're after quantum exposure without the volatility of small caps, blue-chip tech giants like IBM and Microsoft also provide quantum investments, though less aggressively. But if you're prepared to handle the ups and downs, D-Wave could be a once-in-a-generation opportunity. In summary, although D-Wave remains unprofitable and volatile, the pieces are coming together: strong revenue growth, a stronger balance sheet, and increasing institutional support. If this momentum continues, D-Wave could transform from a speculative gamble into a key player in the next tech revolution. So, the question is, are you betting on what's loud or what's quietly gaining ground? As the market shifts, will you follow the hype or position yourself where smart money is already moving? Share your thoughts in the comments. Which of these three tech stocks has the most potential upside? Which one are you keeping an eye on? If you found this helpful, don't forget to like, subscribe, and share with fellow investors. And remember to get your free Breakout stock guide in the description. See you in the next one.